TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials up 701, NASDAQ up 283, S&P's up 103. Gold down 16.90, trading at 15.73 an ounce. You get silver off 71 cents, $15.29 an ounce. Light sweet crude up a buck, 32.40. Notes and bonds. You get the 10-year down 29 ticks, trading 136.11. The 30-year off 3 points, plus 10 ticks, 175.21. And King Dollar up 617 ticks, trading 98.08. Euro is at 111. The yen is at 106.82, and the British pound is at 125 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning.
Another day?
Quite a Friday morning to kick things off.
There's no doubt. There's no doubt. And if you take a look at this, you know, one of the Tigers in the Den posted this morning. Now, this is pretty cool, folks. And, you know, this is what the art of time in the trade was about. But Mr. Z out here gave me a heads up early in the morning. So when you check this out, so check this out. The first chart that I show up here is not going to be part of the time in the trade. This is just a trend line, but this is pretty cool, man. We take this back. I'm going to take it back 15 years, okay? I got to just pick up the lows that were established out here in 2009. So when you take this, folks, okay, and you take the lows of 2009, what you're going to see here, which is just pretty amazing, actually, is that you came right to that trend line, okay?
Yeah.
Now, the Dow Industrials got destroyed. There's no two ways about that. Got destroyed, got back to the December 2018 level. So my take on this is that we're going to be in a consolidation for a couple of years between the lows of 2018 and the highs, though, of 2020. Now, okay, so that's the first chart. Now, watch this. This is where this gets really interesting. If you into Fibonacci sequence, what you're going to see here is that this is confluence, and it's confluence between, we're going to do two different things here. So what confluence, folks, means is that you just have agreement. So if I take the retracement from the lows of 2009 to the highs of 2020, you have a 0.382 retracement. Now, a 0.382 retracement is a very light retracement in the context of 12 years. Well, actually, 2009, 12 years, right? 11 years, okay? So that's your first sequence, right? Now watch this. And so what happens is that confluence is much stronger when you take it off strong trends, okay? So the first trend, we took it off from the low of 2009. The next trend I'm going to take it off is the low from 2015. And when you see this, what you have here is that when we take the 2015, what you're going to see is you did a 0.618 retracement.
Yeah.
Now, the way that sets up, folks, okay, two different things end up happening here. Because we did a 0.618 retracement off the lows of 2015, that's saying that the most you can actually do, if you believe in Fibonacci theory, is that you go to the highs, okay? You take the lows from 2009 and you bring it up. That is saying that in another basically 10 years, the bottom line is that you can actually double up this. You can double up this whole deal, okay? So, you know, I'm bringing it up because the bottom line is that what does happen, what I've found in a large way is that when you have fast markets like this, these fib numbers seem to hit more, and they're more consistent. So today is going to be a big day. There's no doubt. You know, when our markets open, Tom, we had, you know, Europe right now is only up 4.7% to 5.3. Well, Europe was up almost 10%.
Yeah, and they pulled back as well, right? And when we kind of pulled back a bit on the open?
Our market dragged it down. Watch this. I'm going to put the DAX up, okay? And what you're going to see, when we opened, they sold into our market, and bottom line is that, you know, it just took the DAX from 9,985 to 9,553. You know, now my take is that by the end of the day, these markets are all going to be up, particularly because of the way that we opened, meaning that they sold the open again, and now the real question is the battle's on here, you know. So
Sure.
Pretty wild, man. I mean,
hey, I'm just going to post in the Den because just kind of adding to that, right? When you look at, I mean, one thing that's remarkable looking at the Dow as well. So we were a hair shy of 30,000, right? 29,543. Yeah. Remarkable that overnight, the low, we were within 230 points of a 19,000 handle in the Dow. I mean, if you had told somebody towards the end of February that you were going to be trading in the 19,000s in the Dow, it was actually February. I'm going to put this on because I believe it was actually a month to the day. Check this out. So the high here, zooming it in, February 13th. What is today? March 13th. Oh. Remarkable, right? 29,543, that we might be trading at a 19,000. And what that also does, though, just it's basically a 100% move back from, and I didn't go back far enough, almost Inauguration Day. Now, politics, I hope they don't come into this, but how can you avoid that? Wow. I believe, I got the number here, Inauguration Day, 19,827. There's January on the chart, 100%. Of that pullback. Now, you know, if you really want to get political, Election Day back in November, you're talking about that month opening at around 18,000, but we were just trading at 20,000. Remarkable that you can actually go back all the way almost to the election. But within, 200-300 points of Inauguration Day, you can't, argue that is not playing into things as well, possibly. The pressure that the president's going to be under come the general election to not have the market below where it was at on the day he took over the White House, let alone Election Day. Crazy.
That is crazy, man.
I agree.
That is crazy. If we go over to Germany, folks, and you take a look at Germany, now what will end up happening is that Congress is going to have to come up with something. We'll see how this shakes out. I believe the Senate, they're not working today. They claim they're going to come back on Monday. But in Germany, now this is what you're going to see. Germany pledges unlimited cash as the EU set the green light spending. Okay, Germany pledged to spend whatever it needed to dull the economic impact of the coronavirus, while the European Commission said it's ready to green light widespread fiscal stimulus. Germany's goal is to make sure that firms have sufficient liquidity to get through the crisis unleashed by the outbreak. The finance and economy ministers said in a joint statement, France minister said there will be no limit to the amount of money available, and Germany may need to take additional debt to finance the spending spree. Now, for Germany, folks, that's pretty amazing, okay, because Germany is the one on a continual basis over in the European Union that tries to basically not put huge amounts of money into basically not necessarily giveaways, but they don't pump it in like that, and that's left over from, I don't know, almost 100 years ago or 80 years ago from their crisis with, their money got wiped out on the inflation deal. So that's pretty impressive, and it's important to understand too, because they go on and say, there shouldn't be good companies that go out of business because the cash flow stops for 2 or 3 months. So that's
there shouldn't. That's right. Gonna right.
And that's what that's all about. Do you know what I mean?
It is, and that's what it should be about. I mean, that's where we need some fiscal stimulus here from our government to kick things back, because there's going to be a pause for a month or two, and a lot of people, a lot of businesses don't have a 4-week pause button available on their cash flow and bills and revenue, cash flow.
No doubt. Stay right there, folks. Tommy and I are coming right back. Dow Industrials up 692, NASDAQ up 262, S&P's up 99. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 874, Nasdaq up 306, S&P's up 119. Folks, everything's been canceled.
Yeah, you better expect it.
Well, I guess my point, Tom, which is really cool, is that is that the markets got smoked beyond belief. But guess what? What else can get canceled?
Yeah. I imagine the question, and this is why, Larry's program, a great show today, talking about, listen, this isn't going away tomorrow, right? That we don't know what's going to happen in 2 weeks or a month, or if people are going to, is everybody just going to start going back to restaurants when in 2 weeks or 4 weeks when kind of the shutdown ends, hopefully 4 to 6 weeks, right? Is there going to be a slow crawl back to, are you going to be booking a plan? I'm sure there's going to be some great deals for vacations, restaurants, Disney, what it be. But that's more the worry, I imagine, because you're right. You better have priced in. That's what we just found out this weekend last, which is why the market just went berserk, for a lack of a better term.
They did.
Because everyone was like, oh, my goodness, everything's going to be shut down for a month. Like, that's it's unheard of. And that's where we see, I know they're talking about the Masters now, right? Golf, everything.
Well, yesterday morning, remember we were talking about the Grand Prix in St. Pete, and
yes.
They canceled it yesterday afternoon, folks. And there's people that come from everywhere. This is the beginning of the Grand Prix circuit. It starts in St. Pete every year. This is the 13th year in a row, and thank God they did. I mean, that's the reality. It
was staggering. Yeah. So I think you're going to see it more, man. You got schools in Massachusetts, I know, being closed. Mass, especially hit hard. What was it? That Biogen meeting conference, right, down at the Marriott Wharf, I believe.
Long Wharf. Interesting.
Yeah.
Okay. That's a Faneuil Hall,
Biogen
right.
at a conference. I believe 82 cases tied somehow to that out of like the 100 plus in Massachusetts right now alone. So you can see how one conference, I mean, think about that, right? 100 cases reported. There's stories that slow to testing, but of the 100, I believe I saw something, and things are, updating fast, but 80 of them on that conference. But schools getting shut down, I think you're going to start to see that more and more.
Yeah. It's ironic that it's Biogen, a biotech company, that had the conference that ends up, being a problem child for that whole area, so.
I agree.
Yeah. Wild. So, let's go take a look at. I'm going to look at the Dow first, because my take here is that we're going to be in this consolidation for a year and a half, 2 years, or whatever, and that's not the end of the world, folks. Okay, if we take a look at this and we bring this up, and what you're going to see here is that we had the wild thing is that December of 2018 was a high volume low. So we got it tested. Now the problem is going to be, okay, not the problem, but if they're in a consolidation, is that we tested this with another high volume low. Okay.
Okay.
So the way that a consolidation normally works out is that we have a rejection, which we got, and then the real question is going to be, what kind of juice do you get going topside? If the juice falls out too quickly, that you come back down and test. The way that if we go over to the NDX 100, because the NDX 100, you really still want to keep an eye on this, folks, because the NDX 100 has been the strongest indice, is the strongest indice, and you're going to be able to see that in the context that you didn't even get close to the lows of 2018. That's 58.95, and we got to the highs of the lows, which is 71.06, and we hit 72.55. So we didn't even get the highs or the lows. That is a monster heads up, folks, okay, in the context of where you may want to be in this marketplace. It's saying that technically this is saying that the NASDAQ is going to come back faster, be stronger, and all of the above. And, when I look at the equities that are in the NASDAQ, folks, and Tom, I can see it, because you're not talking about large industrial companies. You're talking about digital companies that, have already changed our lives and will continue to change our lives.
Aren't you going to need your phone and your computer even more nowadays if you're working from home and not congregating in the same degree, right? In terms of Apple, whatever it is, yeah.
And what you're going to see here, folks, okay? So picture, the large companies, okay? This is a heads up for everyone in general. I suspect what the large companies are going to do, and even many middle-sized companies that have good cash flow, right? They are going to set up all their employees that they can work from home. Not that they're going to work from home all the time. Do you know what I'm saying? But that may mean new computers, just what you're saying, new phones, new structures. That guess what? Because I suspect what the next thing's going to be, folks, is this. The next thing people are going to start talking about is okay, so, market-wise, let's say that we're at a low here. Then the next thing is going to be, okay, what is the second wave? Okay, so people and companies will have to get prepared for the second wave, whether a second wave comes or not. Okay,
yes.
That's the prudent thing to do, right?
Yes.
So there's going to be some money spent, and I suspect. Well, let's hope that Congress and the administration get something together quick. Well,
they better
for the Small Business Administration, that these smaller businesses, can. When I walked outside yesterday, folks, outside our office, it was so sad, because I was in that spot once. When I first started off with my food truck selling hot dogs, you're 20 years old, you know what I mean? And I saw these trucks, Tom, they were loaded to the hilt, right? And they're leaving a block away from us, and it's like, oh my God, that's a hard thing to make up, folks. When
things are ghost towns, man. That's already in those big cities, I imagine. As they make their way. You got New York, right? 500 people maximum limit on New York for any type of meetings, gatherings, what it is. If New York City, I'm seeing just pictures on social media. Empty train cars. I'm sure that's across the board in many cities, and it may be more. But definitely, that's huge impact, yeah.
It's a heads up. There's no doubt. It looks like, there's going to be a lot of people tested positive for this, folks. The real question is that how sick do they get, and where we go. Market-wise out here, it's going to get really intriguing, though, because if we can, so watch. If we take the S&P, I'll just put this on a weekly for a second, and you bang this out, what you're going to see is that, we came, let's see, is that 18? Yeah, that's December 2018. So the high of that is 25.20, and we got to 24.78. So it's going to be the same thing, even on a weekly. If this market can hold out here today, that on a weekly, that's saying you went to the highs and the lows, which is saying that you can get a heck of a bounce. And the cool thing, what I'm digging right now, is that there's still, and you know, they should be nervous. Everyone should be nervous. But there's still plenty of folks that figure that this won't hold. Do you know what I mean? And that's what you need, by the way, okay? That's what you need. You need nervousness out here for a market to basically hold, number one. And on a Friday, this is unusual that a market can hold, you know, but you got to remember something. We're down 25%, folks, okay? And, you know, maybe...
Yeah, just to reiterate, right? I mean, it's like you said, if things reverberate and come back in any type of a quick fashion, and quick could even be a year with the destruction we've had, you're back to almost 2017 inauguration day levels. So it doesn't, I mean, it's just the run. It's remarkable.
Right. Stay right there, folks. Tommy and I are coming right back. Dow up 970, NASDAQ up 351, S&P's up 134. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 827. You get the NASDAQ up 317. S&Ps are up $1.19. And let's go over and we take a look at Bitcoin here. So XBT. So what's good old Bitcoin been doing? Let's see.
How about that move yesterday? Did you see?
I didn't. That's what I want to look at here.
Oh, boy. You missed a big one.
Wow. Oh,
you
my
sure did.
God. This is insane.
It is. So how about getting basically like a 50% haircut, man?
So
yesterday.
In 2 days, is that right?
Yep. It is. You got it.
In 2 days, we went from 7,900 to 3,900?
Yeah, almost 4,000. I think the low was 4,200. Okay, you're showing an XBT. I have the Bitcoin futures up. It's pretty close, right? 8,000 to 4,000, call it, right? 50% haircut, and we're almost back up to 6,000, though. So people not pulling their money out of the market to go into Bitcoin, that's for sure.
Look at this, man.
Yeah.
This is back to, this is interesting. This is back to 2017, too.
It really is, man. Just goes to show, man, that you can't lose money taking profits. When people said, you got to run, hopefully if people were in that, they took their money. I can't imagine if you were holding out for 20,000 again on the most recent run or something like that, right?
Man, that is something else. Holy cow. Let me just do this intraday for a second. Yeah, so intraday, so it was last night, 2:10 Eastern time, hits the low.
Yeah, 10 o'clock last night.
Okay.
2,200 hours.
Yeah. And then, my God, by 11:30, it's up at 5,600. Wow.
Yeah, and the market spiked a lot last night. I mean, that's the Dow. Some of these numbers, I say it at the top. I mean, if you had bought the low in the Dow last night, now we were limit up, which is 5%, right? But we were 3.5% down, especially in the Dow. Okay, so we went to 20,230. I put it. I'll give myself a plug. The morning market report on the front page. I put this in there because you wouldn't realize it, but when you're dealing with these numbers now, we're used to dealing. I was almost used to dealing with 30,000 Dow in my head for percentages, right?
Right.
Well, last night we were at 20,230. So now you're dealing with 20,000.
Wow.
And the run from 20,230 to the limit up, which was just above 22,000, was about 1,800 points. You were up, if you bought the low last night, you were up 9%, waiting for the market to open and probably go higher. Now, we know it sold off right off the bat, but just 9% actually from low to high was where the market was sitting,
It's amazing. Really is. Brave new world out here, folks. Let's go take a look at some of the higher volume equities and see what we got out here. You got Bank of America up $2.30. Apple's a big one, $13. You got Microsoft up $7. You got Slack Technologies down $3. You got Marbel up $150. Norwegian Cruise Line's up $150. I don't know how that's happening, but it is. Verizon up $1.94. Intel up $4.49. I saw it today, Tom. In Tampa, folks, we have a port that, it's not a huge, it's a huge port, but not just for cruising. Fort Lauderdale has the big one. But there was a cruise going out here last night, and they were interviewing people, and pretty intense, folks. Okay, there were people actually getting on that cruise. And they were interested, saying they were nervous. And I was saying, well, why are you even getting on the cruise, man?
That's where you just have to have a little bit of, I don't know what to call it, man, because I don't want to sound harsh, but you got to be thinking on your toes and be able to make your own decisions. Just because the cruise ship's saying we're going,
right? And you got to discount the money, even if you
That's what I'm saying. Have a little awareness, right? To realize, like. Just obviously the cruise company is going to say things are all right. You go into a hospital, they tell you, don't worry, everything's fine. That's the doctor running the hospital telling you, don't worry, everything's fine. Be aware of yourself and your own well-being. Stepping on a cruise right now is not a smart decision, and that's putting it as lightly as I could.
No, totally.
Yeah.
Let's go take a look at the Dow Industrials, the strength versus the weakness. And we know, no doubt, the Dow is the weakest indice. On the way up today, putting some points into it, you got Boeing putting 109 points, Apple 91, Goldman 84, JP Morgan 55, Visa 55. Taken away from it, you get Travelers putting 11 negative, United Health 8, Merck 6. So you do have most of them that are in the positive, but the bottom line is that the large industrials, folks, will no doubt, still have the more pressure on them than the S&P or the NDX or NASDAQ composite.
Yeah.
Gold. Let's go take a look at gold, because what has happened here is that this dollar has caught a bid. And gold down, it hit 1551 today. You're at 1567. You've done 278,000 contracts. Now, this contract volume is going to be a big contraction, which is really positive. So, I mean, gold is still game here for 1542. But that's the bottom of, well, how we broke out here. Actually, it's 1536. And if we go over to the dollar, because it looks to me that this dollar is going to make a run for the highs once again. This is quite a move. You know,
Sure is.
We went from the lows that were established last week of 94.65. And you can see, I mean, this is a decisive break of that downtrend. So 930's game again. And then, you know, you put that together with the bonds. You know, the bonds finished that ABC up. You know, even and the Fed's coming in, folks. The repo, the Fed's coming in with, I think it said $5 trillion now. 5. 1, 2, 3, 4,
Amazing.
5. Yeah, isn't it? I know. That's in the repo market, folks. And what that's all about is that the bottom line is that they're going to keep the banks liquid to keep money. And so here, let me just go through this slowly so you can understand how that repo market works. Let's say you're the bank, Tom, right? You bought, you're leveraged to the hilt, okay? But as you leverage, you have treasury bonds and you have mortgage bonds, okay? In your portfolio. So what happens is that in a market like this, well, you can't sell them because no one's buying, right?
Sure.
But they are an asset to your bank, okay? Well, the way the regulations read, folks, is that you have to have, well, you don't have to have securities, but you have to have so much cash at the end of the day, okay? So you have the securities, and normally what you can do at the end of the day, you're moving the securities out so you have enough cash, okay? So in a market like this, you don't have any buyers.
Right.
The Fed comes in, folks, okay? So I just want to, this is the part that I want you to get, because people think that the Fed just gives money to the banks like that. They don't. What they're doing is that I say to you, okay, Tom, you have $100 billion in treasuries, mortgages, right? Give them to me overnight. I'm going to give you the $100 billion. So legally, you have plenty of money. Your customers come into you and say to you, I need more cash. You can give them the cash. That's how the repo market works, folks. Okay?
Yeah.
So it's really cool because of the context that they do have the assets, but like we all know, you can have an asset, and if you can't sell it and you're in a bad market, you need cash. You know?
Yeah, and that's why it's such a different deal, right? You hear $5 trillion or something like that.
That's right.
I mean, the money should come back versus a governmental fiscal stimulus plan that would be government stimulus straight out from the coffers getting paid out. But we have, you know, economy chugging along at trillions and trillions of dollars, and my personal opinion, you're going to have to spend hundreds of billions right now to make sure the wheels get greased, man, because you let it go for a month or two and you just let things fail in that month or two.
Stores will start closing. Right.
I mean, we've all heard the statistics. I don't know the exact one.
Stay right there. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 657. You get the Nasdaq up 261. S&P's up 96. So here, check this out. We're talking about the Fed, so they're also just come out this morning. They're going to, this has nothing to do with the repo market. This has to do with the bond market. But check this out. New York Fed plans to buy treasuries today as part of the previous announced plan to buy U.S. debt beyond bills. No, that's not repo. Okay. These purchases are intended to address the highly unusual disruptions in the market for treasuries. So here's the specifics, okay, from this is all New York time, so Eastern time. 20 to 30-year sector. What time is it right now? 10:40. Okay, so they plan on coming in at 10:30 this morning, at 2:15 and at 2:45, and each round is going to be $4 billion each. That's on the 20 to 30-year bond. The 7 to 20-year sector, they're going to come in at 11:30 with $5 billion. The 4.5 to 7 year, they're going to come in at 12.15 with $8 billion. So what they're doing, folks, they're going the whole curve. Okay.
Yes.
So what you have is this: you have bills, you have notes, and you have bonds. Okay. I know this is a lot at the same time, but bottom line is that, and I don't even know
important stuff. Totally. Yeah,
and I don't even know why they call them different things. So a bill is anything, I believe, less than a year. A note is anything less than 10 years, and a bond is anything over 10 years.
Yeah, I believe so.
And so when you look at this, it's pretty wild. So let's see, at 12.45 to 1, they're going to come in with $8 billion. At the 2.5 to 4.5 sector, and then the 0 to 2s, they're going to come in at 145 with $8 billion. These purchases are part of the $80 billion of planned monthly purchases, including both $60 billion of reserve management purchases and $20 billion of reinvestments. Bottom line, what you want to get out of this more than anything, folks, is that the Fed's going to keep coming in for liquidity, which markets need. They
need it. The reason why I just keep stressing that fiscal deal, hopefully people, if it really comes to it, we need some bipartisanship, man. This is not bipartisanship because we need that type of fiscal stimulus. The Fed can't say, there's no evictions for a month and everybody gets disability or unemployment pay for 4 weeks. And that's really something like that is what this economy needs, so that people aren't losing their job, kicked out of their house, default on their credit card payments, default on their car loans. And before we know it, we have unemployment at 10%. That's the fear that really, hopefully, we avoid, like right now, maybe.
No, that's right. No, there's no doubt. And, we'll see what this first bill comes up with.
I said to a friend last night, not to jump in, I said, do you think it got bad enough that, am I a sucker for thinking there might actually be the ability for Congress to come together on this one? Because it was literally, at what point the Fed puts $500 billion in repos and the Dow goes down 2,000 points and 10% in a day. At what point does Congress hopefully not act in the best interest of the citizens, man? Hopefully.
No, there's no doubt. And, if you go back, folks, and look at not the last time Powell was, actually a month ago when Powell was in front of Congress, he was saying flat out, listen, the Fed's done everything it can do.
Yeah,
It'll keep doing it.
Especially this type of event, man.
Right. And there's no doubt. So I suspect what we'll see how this thing shapes up, what happened in 2008, and this was a trip, folks, and if you guys and women that were around at that particular point, what Tommy's talking about is as Congress gets together, what had happened on the first get-go, they couldn't get together, and that market, they thought the market went down badly 2 days before that. That market went exponential down, and then they realized that they're all going to lose their jobs, so in the middle of the night, they came up with something. And I think the first one was cash for clunkers.
And it's not easy, right? Because it's a lot of money, man. We're in a lot of debt. So I get the angst in that department, but you can't pause on something like this. That's just going to be, it's going to be more of a drastic change in life than I've ever known. I think most have, in terms of just a momentary pause of all social gatherings for 4 to 6 weeks. I mean, it sounds almost small, and on one essence, it sounds like historic.
Yeah, well, in St. Pete last night, so it was really intriguing. There was some places that had absolutely no one in them, and there were other places that had people in them. So.
And you can still go out. It's not. I don't think it's going to be to that degree, but I imagine on the other side of that, don't think you're going to have to live in like a cocoon for forever, right? If things get done right, hopefully it's just a 4-week.
Yes.
Pause.
Yeah, no, there's no doubt.
Yeah.
So let's go over and take a look at Microsoft. So Microsoft, folks, was the strongest equity on the way up. Microsoft's up $6 right now. You're trading at 145. We bring this back. When you take a look at like a Microsoft chart, it's only a blip. I mean, that's it's a long-term chart, but it's let's see. Excuse me. I'll bring it back to 2009. You're at $14. That's hard to comprehend, isn't it?
It is, man.
$14. $14 up to a high, folks, of $190. And right now you're at $145. And when you do still take a look at this as to where we are, this doesn't, well, here, let's do the same fib sequence and see where we're where we are, just from the downdraft from. So from the downdraft to 2018, you're at a 50% retracement. And you can see that when I brought up the other indices, folks, we were at a 0.618. So you can see that inside, well, that was the Dow Industrials that I brought up, 0.618. But you can see how the NASDAQ is that much stronger. Let's go look at Amazon. Amazon on pullbacks has always been so hard to buy, man.
You would have gotten a heck of a deal overnight last night at 1,600 and change.
Seriously. And Amazon's still in it. It's just in a consolidation. I mean.
Yeah. I mean, long term, we've talked about it many times. I think if anybody's in the market, I mean, if you're buying for 5 or 10 years or you're looking for stocks for your retirement, for your IRA or something like that, you can't go wrong with some of these big tech stocks, I think.
There's no doubt. There's no doubt. I mean, if you think it's the end of the world is coming, well, what difference does it make, right?
I agree, right? If, the U.S. dollar, you bury dollars in your backyard. If the stock market goes to zero, I don't know what those dollars are going to be worth. So.
No, yeah, exactly.
Yeah.
Let's go take a look at the XAU, the HUI, because there's no doubt those equities got hit, and they got hit big.
Maybe bury a little gold in your backyard, though. That actually would have some value, maybe.
So we put this. Let me put this. I'm going to put this on weekly first, and let's see where we're at here. Let's see. So you're back to this. Is going to be back. I'm going to do a 5-year monthly because it looks to me you're back to the breakout. Yeah, you're back to the breakout from June of 2019. But the bottom of that is $70, and we hit 75. So that's still in a consolidation. That's the XAU. We take a look at the Gold Bugs Index. That hit 175. Same setup, yeah. June of 2019. Stay right there, folks. Tommy and I are coming right back. Dow Industrials right now. We're at up 660, Nasdaq's up 260, S&Ps are up 93. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 658, Nasdaq up 254, S&P's up 91, and the battle lines are right here, Tom. This is going to be interesting, because what you did have, of course, when we take a look at Europe right now is up 3.7 to 4.7%. It was up, folks, 8 to almost 10%. If we take a look at our own S&Ps, my take is we're going to hold, but the battle line is right here as we're speaking. Your first leg down, let me open this up just a little bit for you so you can see this. That first leg down in the marketplace on the sell-off got down to 25.46. We're 25.57. So bottom line, this is the battle line, Yeah,
I mean, we were sitting in the S&Ps. The limit was 25.82. And you were trading there since 7 a.m. about, so 2.5 hours. The market was saying we're not trading below 25.82, man. Right. And just like that, we're back down to this level twice, and we'll see how we hold.
Yeah, and that's what really my take is. That's why this market's going to hold right now, because you sold off at the beginning. You have the battle going on right now, and we'll see who wins this battle right here. Because if you hold, You're on a Friday. It's very unusual that you can do that, folks. And the more unusual that it gets, the higher that you can actually go. That's how this kind of shakes out. So, going to be a wild one. And, of course,
it sure is, man.
TFNN, we got great programming coming up the whole rest of the day. We got TD Ameritrade coming up. Then our man, Mr. Basil Chapman, he's going to be riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon.
Who knows where we'll be by 3 o'clock p.m. this afternoon, man.
As Basil Chapman would say, the day is early, right?
Oh, it is, especially on days like this.
I love it. Folks, have a great one. Have a safe one. Stay right there. Think of Swim coming up next. Thanks, pal.
Thanks, man.
Go get them, folks.